Hey folks, Simon here with your Tao Daily for Tuesday, the 25th of February 2025. The S&P gapped up a little at the open, but didn't manage to stick the gains, eventually closing down about 0.5%. And from a technical perspective, things are looking kind of less than fantastic here. Reason being, we've now closed below the 50-day moving average. We've closed below the anchored VWAP level from the start of the year. So what I'm going to do is just draw another big box around here, starting at, this is the gap, post-election day or the election day gap. And so long as we kind of maintain that box structure, I don't think we can say terribly much about the trend. All right, we could get a lot of sideways chop within this box, but until we break either to the upside or the downside, not a lot to comment on trend. But I'd have to say, given recent price action, a retest of the bottom of this box is looking like an increased possibility. Now, breadth wasn't awful. 6 of the 11 S&P 500 sectors were positive on the day, but there was only one sector that moved more than plus or minus 1%, and that was tech. Okay, so the tech sector was down 1.43%, also closing below its 50-day moving average, also closing below its anchored VWAP level, and that's weighed on the Nasdaq. Okay, so looking at the cues here, this is another one that I'm just going to draw a box around. And again, I'm really just going to say, if we don't get a close outside of that box, we could just see a lot of waffling around within it. All right, and again, just given the technical setup here, a retest of the lower end of this box looks like an increased possibility. We're continuing to see weakness amongst the high-flying stocks, things like Palantir. Palantir was down almost 11%. Oklo was another one that was down about 12%. We saw some pronounced weakness from Qubits, QBTS. That was down, nearly 12% as well. SMCI, former high flyer, trying to become a high flyer again, down 8%. Rivian was another one that was pretty weak. And a lot of the Chinese stocks seeing some profit taking as well. It's had an amazing run, so it's not surprising that Alibaba was down over 10%. You could say the same about Tencent, was down 10%. Billy was down 10% as well. There's a bit of a theme here, isn't there? Futu, which owns the broker Moomoo, was down nearly 10%. Pinduoduo, or PDD, that was down nearly 9%. JD was down, that's the wrong code. JD.com down about 7%. So market clearly shifting from risk seeking to risk off mode, and that is clearly expressed by the fact that consumer staples are surging here while consumer discretionary stocks are breaking down and have taken out support. That's what I got for you today. I hope it helps, and I'll catch you next time.